pretty soon, what you're going to see in the U.S. is going to start looking like downtown Detroit. If downtown Detroit had a baby with the south side of Chicago, that's what you're going to see in the U.S. I think we are looking at another Lehman Brothers situation unfolding in front of our eyes right now. I think this is what we all should be focused on, because if this bank goes down, which a lot of people are speculating that this bank is going to fail, it's going to take a lot of people down with it. And it's going to take a lot of banks up here down with it. It's going to take you down with it. Welcome, guys, to the Deviant Court Podcast. As you know, I'm your host, Drew Dukes, and today we're going to talk about some serious stuff, okay? Today, we're going to talk about money. I know we've been focused a little bit about politics for the past couple weeks here. There's been crazy stuff going on in the news, but however, I think those crazy nonsense going on in the news is the big distraction. I think there's a lot of things right now, especially when it comes to the economy, we should really be focusing on. And there's a couple things here I want to go over with you guys that I can see as big problems. They're going to be coming towards the market pretty soon, and it's going to be affecting every single American out there. And I don't see this being talked enough about the media. Now, before we go ahead and get started, go ahead and head on over to our YouTube channel at the Deviant Core Podcast. Go ahead and subscribe to our YouTube channel. And we're also on Facebook if you guys want to be able to watch the video at the Deviant Core. Go ahead and like our page, follow us for more videos. And on top of that, for those of you guys who are listeners, man, we are on a lot of platforms. Go ahead and check us out on Apple Podcasts. We're on Spotify. We're on Overcast. We're on Stitcher. And that's pretty much it. I think that's it. We got them all covered. So head on over to those platforms and get us on and listen, because we got a lot of important stuff to talk about here today. So as those of you guys know, we are in not the greatest position right now when it comes to the economy. I hope you guys understand that we are pretty much marching towards our eventual doom. And there's a couple reasons why. And one of it you guys already know is kind of what's going on right now. Unemployment being as high as it's ever been. Now granted, the past unemployment numbers that came out, we're looking at right around 8.4%, which is down from the original 10.2%, but we're still not where we need to be pre-outbreak, right? Because before the outbreak, we were much, much lower than this. 8.4% is still pretty high, but it's not to see that those numbers are going down if you believe what's coming out of the job market, which I don't tend to believe what the government numbers are saying, because I always think they're skewed in certain directions. Now, here's the big thing. We all know that, a lot of corporations have gone bankrupt. They've gone bankrupt, and many more will continue to go bankrupt, right? And here's the big notion that people tend to just kind of gloss over, and it just baffles me, because it's not even really a secret, but the big issue is all of this nonsense, the stuff that's going on with the economy, the bankruptcies of a lot of these corporations, the homelessness, the mass waves of unemployment you're seeing. This stuff was already going to happen. Think about it, right? Last year, 2019, we had 19 major retailers filing for bankruptcy. We had tons of people filing for unemployment during that time, right? So matter of fact is that these problems have been existing before the outbreak, and it's funny to see how now a lot of these corporations are blaming everything was great when the pandemic wasn't happening, but now it's happening, we're all losing money. BS. I call BS on that, because back in 2019 all y'all were taking out debt at insane amounts, at insane rates, thanks to the Fed keeping interest rates damn near close to zero. Well, guess what? A lot of these businesses made reckless spending. They made reckless investments, and it blew up in their faces. If you guys don't believe me, ask what happened to Toys R Us. Anyone who remember what happened to Toys R Us, you go ahead and let me know. They were under a crap ton of debt. They could barely pay their bills. They could barely pay their employees. So now we fast forward to 2020, and guess what? 26 major retailers now have gone bankrupt. Most of them y'all know. Well, some of them have been my personal favorite. GNC, General Nutrition. I used to go there. I used to get my supplements from there. Gone. Pier 1, gone. JCPenney's, gone. Brooks Brothers, gone. 26 more companies went bankrupt this year alone, 2020. You know what that means? The little unemployment spat that we saw where massive people filed right in March and it continued on. We're going to see more of that. We're going to see more bankruptcy. And now you kind of see people who are kind of walking around, moving around and pretending things are normal and people are going to go back to normal. Things aren't normal. They'll never be. What the government and media are doing right now is to distract you from what the real issues are. And I'm not even halfway done. I'm not even close. 26 more this year. And that means more people are going to lose their jobs. More people are going to be on those unemployment lines. But that is not it. That is not it. Because what this outbreak has done, it has exposed a lot. And one of the things it has exposed is that a lot of business owners now don't need real estate. More particularly, they don't need commercial spaces anymore because we're in an era right now, everyone's working from home. Everyone is working from home. So why spend thousands of dollars a month for space where more and more people are now working from home? So what is that going to do? Well, now you're going to see a huge downturn for commercial real estate. You're going to start seeing empty commercial real estate buildings. Some of you guys, I live in Madison, Wisconsin. Some of you guys who've been driving around, you see some of the empty commercial properties already. Some of these business owners that are already filing for bankruptcy. Some of these malls, some of these businesses in the malls, they're already filing for bankruptcy. They're already out of there. So you guys can already see what's happening, right? And then on top of that, it's not just happening with commercial real estate. You're also looking at landlords, right? Because as people lose their jobs, guess what? They're not going to be able to afford rent. Eviction moratoriums has ended a while ago. So there is not a lot of protections for a lot of people out there right now that's going to keep them from getting evicted from their homes. So now landlords are going to have to suffer. Not just landlords for people who've lost their jobs, but landlords for people who live in wealthy areas. They're fleeing in droves. They're fleeing to not cheaper poorer areas, but cheaper rural areas in droves. They're flocking. So that's leaving a lot of vacant units that landlords can't even fill, or they're struggling to fill. So people are going to be squeezed on both ends, and it's only going to get worse because we're going to see a more rise in job loss as more of these businesses go bankrupt. It's not over. Pretty soon, what you're going to see in the U.S. is going to start looking like downtown Detroit. If downtown Detroit had a baby with the south side of Chicago, that's what you're going to see in the U.S. And that's what's coming if no one wakes up. If no one decides to wake up and focus on the real problems, that's what you're going to see. Now, you might be asking, well, Drew, okay, all this stuff is going on and you're saying, the world's going to blow up. Dude, it looks fine. The government said it's going to be fine. We're going to rebound. Stocks are high right now, Drew. Stocks are high. What are you talking about? Well, what no one I see that's talking about that I see is a big problem right now are derivatives. That's right. Now, most of you guys probably have never heard this term before, or some of you guys have heard it being loosely thrown around, but derivatives. We have a derivative problem. Now, what is a derivative? What is a real estate derivative, right? Well, a real estate derivative is essentially a mortgage-backed security, right? What that basically means is it's a way of investing in the market, in real estate market, without actually having to buy a property. So what they do is they create kind of like an asset that derives off the value of another asset. So for instance, instead of going around buying and flipping a bunch of physical real estate properties, right? You get a derivative like a mortgage-backed security, and you can invest in that. So that takes off a lot of the risk in having to go buy and sell properties and go with all that process, and it's a lot quicker. And the best part about it is you don't have to touch the property at all. You have to do any of that, right? So if I have a property or a group of properties worth over $100 million, right? A group of properties worth over $100 million, the value of the derivative is gonna come. It's gonna be based off of those underlying properties there. That's what it's gonna be based off of. So what this then does, it turns a lot of banks into essentially middlemen. They become middle guys, right? So what they do is they are in between the real estate buyers, the homeowner buyers, or the mortgage buyers, right? And they're the medium between them and the investment community, the private equity funds, the private institutional investors, the public investors, those kind of guys, the investment banks. They become the middleman for those. They take the fee in the middle, right? And then they get a bunch of investors to invest in these groups of securities. Now, under key circumstances, this relationship works out. But you have to make sure that all parties to each side are being honest, right? See, what ends up happening is when a group of people starts making a little too much money, greed sets in. So in this case, you got a bunch of bankers, right? They're making money off of these insane amount of fees they're making because real estate's hot. Real estate is hot right now. So they're making a lot of fees, but guess what? There are only so many good people you can lend to, right? So what they start to do is then they start to find other people who aren't the greatest to lend to. And then they start bringing those guys in, and they start packaging those up, and they start selling those to investors. And eventually the bubble goes bust. Because what happens is those people who shouldn't have gotten those loans, who couldn't afford it, are now defaulting. So that entire package, it's like putting a couple rotten apples into a basket of good ones, right? Eventually the whole thing becomes corrupted. And that's what happened. And it started to blow up in people's faces. That's what it started to do. Now, commercial real estate backed securities is a little bit different, right? Same principle, but a little bit different. And y'all remember Lehman Brothers, right? Because I think we forgot about Lehman Brothers. Y'all remember Lehman Brothers? Well, Lehman Brothers, the reason why they're starting to come into play is because, for those of you guys don't know, just like I just explained with the mortgage-backed securities, Lehman Brothers were the largest banks that had the largest exposure to these toxic mortgage-backed securities. And what happened? It took them down. But it didn't only just almost take them down. Well, it did take them down. It wiped them out. They were done. But it almost took down the world economy, the global economy. So what you guys got to understand is banks, traditional banks, commercial banks, investment banks, the way they operate, they're so interconnected, it's not even funny. So one thing that's happening on one side of the world, it's going to affect the bank at home, because the deals they do are so tightly connected. So now, commercial real estate, the reason why it's a little bit different is because it has the same principles, but now you're dealing with commercial properties. Now you're dealing with office buildings. Now we're doing real estate. Now, unlike 2008, we don't have a situation where, you know, we have a bunch of bad, you know, people who can't pay their loans, and subprime people that can't pay their mortgage loans or anything like that. It's a little bit different. You have a little mixture of that, but it's a little bit different. This year, it's affected by people who are affected by the outbreak, right? The business owners, the employees, all these different places that now realize they don't need these commercial real estate spots. So they're fleeing. So some of these companies going bankrupt that can't pay their leases right now in these buildings, that's going to affect the amount of investments. That's going to affect it. It's going to affect that pool. Because, like I said before, commercial real estate works in the same way. Different, but in the same way. You got banks acting as middlemen from these commercial properties to these investors. So we talk about commercial real estate now at this point, taking a hit because of the pandemic, and we know that first of all, commercial real estate, it's overvalued, very overvalued, and the prices will crash. So now that we kind of explained the whole derivative thing, we understand that the value of the derivative is based off the underlying value it's derived from. Well, guess what? If commercial property starts to crash, what happens to the actual derivative? Not only that, what happens to the guys holding that bag of derivatives? So we come back to Deutsche Bank. Now, you might be asking, Drew, what the hell is Deutsche? Who the hell is Deutsche Bank? What do they got to do with any of this? What's Deutsche Bank? Who are these people? Deutsche Bank is a German bank, right? They're a German, big German investment bank. And for those of you guys who, kind of follow the political machine and all that stuff like that, their involvement in Trump. And then you look deeper than that, they've had all these other shady investment. But for the vast majority of us, we've heard of Deutsche Bank. They're a German investment bank that's been in and out of trouble over the years. Well, they're even deeper hot water right now. Recently, as of July 7th, they've announced 18,000 layoffs, which is roughly about fifth of their one-fifth of their workforce there at that point. And what they're also doing is they're going under this massive restructuring program. For those of you guys who don't know, Deutsche Bank has been in a lot of trouble. They've been in and out of a lot of trouble for the past couple of years. Matter of fact, for the past 3 months in 2019, consecutively, they've lost over $3.5 billion. They've been hemorrhaging money left and right. That's Deutsche Bank. Now, some of it's not through what I'm about to explain. A lot of it's through a bunch of different scandals that they've been involved with, but majority of it really stems from them not truly recovering since 2008. Matter of fact, they've been breaking even up until the past 3 months that they've been losing billions of dollars. It's actually pretty worrisome for a lot of investors right now. And the reason why is because Deutsche Bank, in addition to that, also has $49 trillion worth of derivatives. You remember that stuff that I was just explaining not too long ago? Yeah, these guys have 49 trillion, trillion with a T, with a T of this stuff. Now we want to look at them. Let's not look at them with a harshful lens, because they're right up there with the other top three banks we have at home. Citi Group, they got trillions. Citi Group, I think, is about 47 trillion of this toxic shit, right? JP Morgan, they're about 48 trillion. Goldman Sachs, they're about 42 trillion. So you see all these banks, they're all up there. They're all up there. They all do deals. They're all up there. They're all together. They all have shares of these toxic derivative packages. And Deutsche Bank being among the largest of them all. Now, you combine this exposure, this massive exposure, to a massive amount of losses and the expensive restructuring programs they're going through right now, you can see why investors, big institutional investors, I'm talking private equity, big institutional guys like Warren Buffett, they're slowly backing away. They're unwinding their investments with this bank. In fact, they're unwinding it so much, Deutsche Bank's losing about $1 billion a month. So you guys might be asking, okay, why the hell should we care again about Deutsche Bank? What the hell is Deutsche Bank, and what the hell does that got to do with us? I'm going to tell you real quick. I'm going to tell you what that has to do with why you should care about this, right? Because like I said before, these banks are interconnected. They're interconnected. Now, remember Lehman Brothers. What was the biggest responsible factor of the downfall? They had the largest shares of these ginormous, toxic mortgage-backed securities. Now you look at Deutsche Bank, that has the largest exposure of these derivatives, couple that with a lot of these expenses and restructuring and layoffs they're going through and losses they're having, I think we're looking at another Lehman Brothers. I think we are looking at another Lehman Brothers situation unfolding in front of our eyes right now. I think this is what we all should be focused on, because if this bank goes down, which a lot of people are speculating that this bank is going to fail, it's going to take a lot of people down with it. And it's going to take a lot of banks up here down with it. It's going to take you down with it. You don't believe me? Imagine homeless, millions of people homeless across the board, millions of people hungry across the board. It's all going to collapse. Lehman Brothers, if it wasn't the help of the U.S. government at the time with the bailout, the help of your taxpayer money, which you got to pay back in the future, by the way. If it wasn't for the help of them, I mean, Lehman Brothers was done, but they would have taken out the global economy. Now you have a ginormous German giant like Deutsche Bank in a situation right now where not only they're experiencing massive losses in the billions, they're exposed to toxic derivatives in the trillions, and investors are pulling out by the second. We are experiencing another Lehman Brothers moment, and this is something that you guys got to be focused on. This is the real story, right? They got you all now focused on whether your life matters or my life matters or all life matters, where your rights matters or my rights matters or whoever rights matters. They got everyone else focused on that nonsense. In the meantime, you got bankers, asshole bankers, who are running out the back door with all the fees and all the money and crashing your economy. Matter of fact, the economy of the entire globe within it. Yeah, you want to sit there and argue about all this stuff? You want to argue about all the stuff that don't make sense? This is the stuff that we should be worried about. Because when this goes, the U.S. is going to be one giant downtown Detroit having sex and a baby with Southside Chicago, and we're going to experience that. You're going to see violence. You're going to see boarded up buildings. You're going to see more business losses. This is serious. This is the stuff that we need to be paying attention to, but the media is not going to tell you that. The media is going to make you believe that someone like me is your enemy, or someone who looks different from you is your enemy, or maybe someone who thinks politically different from you is your enemy, or who views things differently, who dresses a certain way, right? So the media is going to try to set you off to your sides, but the real problem is that we're all being played for suckers. 2021 is going to be an absolute gruesome year. If you think about it, what happened after 1929? Go research that. I guarantee you're going to understand what's going to happen here. It's going to happen. And a lot of y'all are going to be exposed. A lot of y'all are going to be exposed. Because everyone can do great in good times. But when times get hard, the real you got to come out. And 2021 is going to bring that out of you. And I pray to God that we're all ready, because we are not paying attention to what's happening. You see all this going on right now? This is just a distraction. This riots, protesting, all of that is just a distraction to buy time. That's it. And once time is bought, they will leave you in the dust. They will leave all of you guys in the dust to keep fighting for scraps, because that's what you're all doing. That's all I got to say. I hope we pay closer attention to this. I'll be following up. I'm watching this bank like a freaking hawk right now, and it's not looking good, guys. We might be looking at another Lehman Brothers moment exposing itself right in front of us. So I say, for those of you guys, protect yourselves, protect your family, and go. I'm a Second Amendment guy, so go get some guns. You know, because I said this before when this outbreak first started. I said you're gonna see a big divide between the haves and the haves not. And 2021, you're really gonna see it. You're already seeing it unfold now. Massive homelessness, massive people unemployed, desperate people looting, shooting, and out there protesting because they got no purpose and they got nothing else to do because it was stripped from them. So now, y'all got to get ready. Protect your family, protect yourself, learn a new skill. That's all I got to say. And with that being said, thank you guys so much for watching. Thank you guys so much for listening. If you guys want to check out the podcast, go ahead and head on over to YouTube. We're also on there. Watch the videos at the Deviant Core Podcast. Go ahead and check us out on Facebook at the Deviant Core. Check us out for listeners, check us out on Apple Podcasts, Spotify, Stitcher, and Overcast. I keep forgetting that one. But check us out there. And if you guys have any questions, feel free to email me, send me on Messenger if you want to talk more about this stuff. I'll be having a guest on later to talk more about this. So that way we can get a lot of this stuff was simplified. Was very, very simplified. Obviously, it's a little bit more complex than what's happening, but it's just meant for you guys to focus on what the real problem is and where the real issues are going to come from. Because the trigger, the straw that's going to break the camel's back isn't going to come from what we expect it to come from. Home, problems here, all this other stuff. It's going to come from someplace completely unexpected. And once that hits, once we're all faced with the truth, it's going to be a situation where it's like 2008 all over again. Where did this come from? Who could have seen this coming? I am letting you know now. This is coming. It will be a bad year, but you got to be ready. It's time to stop the BS and it's time to prepare. That's it, y'all. Take it easy.